it really pays to know about short selling and how to avoid it, and kind of understand the battle between longs and shorts. Okay, so let me talk about GHSI. Here's the chart. Over 100 days, it is absolutely terrible. Over 10 days, yesterday it had some spiking. It had some pre-market spiking, then it came down. You had another big spike, came down, another big spike, and then it's kind of petered out, and now today it's just dead. This lack of bounce today suggests that it's going to probably crack the 160s. Shorts are probably loading up, going to go to the 150s, 140s. The fact that shorts are loading up still means that it could potentially squeeze today. But this kind of play where it frankly just keeps failing year after year, day after day, month after month. Like, it pays short sellers to bet against this. So the only hope for this stock to go up is to squeeze enough short sellers. And that's very similar to CODX, where you had the pre-market spike, bounce or dip down to the 160s, bounce near the market open to 2, and now it's just fading again. It's still up 70% on the day, but when you go into the details, this is CODX. It's tried to spike a few times and failed. So when you have a history of failure, and look at this big spike back in January. Remember that day? That was crazy when it went from 1 to the 3s, and it just failed, and then it came back down. So stocks like this and charts like this, like, it did put together a multi-day run-up back in May of last year, so it doesn't always just fail on day one, but more times than not it does. And that gives short sellers more confidence that it's going to fail. And already they've been rewarded. If you shorted near the market open in the 180s, 190s, or 2s, you're already up 20, 30% on your short. So it's tough for me to buy these stocks because that if they do go up, it's only because shorts are getting squeezed. Otherwise, the shorts are in control and they're just going to pound it down into oblivion, which is what we've seen again and again with a lot of spikers. So it really pays to know about short selling and how to avoid it, and kind of understand the battle between longs and shorts. And right now on CODX, shorts are in control. GHSI, aside from one little squeeze yesterday morning, the shorts are in control.
But yesterday, I saw one comment from the profit rate.
Okay.
They mentioned on the SEC filing.
Yeah.
The 424B3 filing. What does that mean? I tried to search, I cannot find it.
Let's see. That's Michael Good. He loves reading the filings. I don't. For me, it's just it's like a battle between longs and shorts. But if you go to like otcmarkets.com, which is just a good website for filings, they usually have it. There's also a lot of SEC filings where they file, but it doesn't really impact the price. Companies have to put out their filings, but they're not necessarily like market moving stuff. So they put out their 424B3 filing. They're reselling some shares, so it's basically just a way to do a financing, and that's part of the reason when these companies spike up. There's demand for their shares. There's demand from investors. Most of these companies are borderline bankrupt, so they need to raise money. So if the stock goes up, they're not excited that, hey, we're valued higher. It's more like the stock is up, let's do a financing. Let's raise money while people are, excited about us. And that's what this filing is. So the shares are offered from time to time by selling shareholders. And this is the thing, like where you have either, there's many different kinds of financings, but no matter how you slice it, people are selling shares into every spike. So when you have a massive spike like GHSI had yesterday, look at today. Today it's like there's just no movement. And it's partly because I think people are selling those shares. I mean, that was a filing for 22 million shares. So those shares need to be absorbed before you can just have like a normal market. And then you have short sellers who know that there are shares being sold. So it's kind of like there's blood in the water, and the short sellers are sharks, so they know to attack. So not only do you have the 22 million shares being sold by insiders, now you have, let's say, 22 million shares plus probably like another, maybe 5 or 10 million shares being sold by short sellers because they know that there's other sellers. It gives them a cushion. And this is what happens with a lot of these stocks where, they go up for a day or two, and then the shorts take control, the financings take control, and that's why most of these penny stocks, just drop. And that's the whole short sellers argument. They're like, let's just short anything that's up because the company will probably do a financing. They need money, and that's it.
But is this would be pretty good idea if you see they have insider selling. So insider selling, then short sales should be get the same boat like the
problem is that this filing was out on July 15th. So the filing was already made before the big spike. And this is where it becomes inexact, where that there's 22 million shares being sold, but at the same time, the stock spiked big. If you bought it near the market open yesterday at like 130, it went up to 3. Yeah. So the stock nearly tripled, even though there's bad news already in an SEC filing. So this is where it's not an exact science, because a lot of short sellers will say this is bound to come down. There's a lot of sellers. They were right over the course of a day. But if you also took the opposite argument and you said, yeah, there's warrants, yeah, there's financings, I don't care, there's a lot of short sellers that usually short too early, that gives it more spike. No big or good company is tripling in the day. So sometimes the worst companies with the most financings and the most insider sales spikes the most. And that's tough for people to understand. Like, how can the worst company spike the most? But it kind of creates an inversion, even if it's only temporary. But GHSI was a fantastic short squeeze yesterday. But now the shorts are in control.
So that's make a short sale can be a pretty dangerous. Practice if you are not
DRYS. I don't know if I have it on this computer. I think this might have been a few laptops ago. But DRYS, let me just see if I posted the chart. This is the worst fundamentally flawed company possible. And here's the chart. This is a 5-day chart, and it went from 5 all the way up to $118. This is a 5-day chart. Okay? So this thing went up, what? I don't even know. What's 118?
Just make it a history.
What's 118?
Everyone was talking about
118.
That one, I remember, had 262,000 shares available when that spiked.
Yeah.
Yeah, I was like, what the hell?
There were a lot of people, I don't remember who, somebody shorted big in the 30s or 40s. I think it might have been Tim Grittani. Grittani told this story where he was like on vacation somewhere and he shorted big in the 40s being like, this is ridiculous.
Let me guess, he lost, right?
He did. He lost. I think he might have just shorted 1,000 shares. Don't quote me on this, but I think he shorted 1,000 shares. He was on vacation. It was like 5 to 40. This is ridiculous. It's going to come down. I'll make an easy 10 or 20,000. And then I think he covered it at like 75 or 80, and he lost like 30 or 40,000. But that was good because then it went to 118. But this thing, I'm kind of sad because this thing could have gone higher. It was spiking pre-market when it got halted by the SEC. So like this wasn't even a trading day, and I just took a picture of it because it was amazing because it broke the previous high. Shorts were getting squeezed left and right, and then it got halted. And basically, there was my special brokers were Centerpoint. And what was their other name? Oh, Capstone Securities. These were like the two brokers that had so many shares to short of these special names. And they were literally defunct. Like they were out of business with this stock at 118. Because there were so many people who were short and they were down so much. and the SEC stepped in. I don't know if they made a call or whatever, but they halted it. And then when the stock reopened, it was down, 40, 50%. But this is a terrible company, terribly just raped by insiders, no fundamentals whatsoever. And the stock became, it went up 20 times. This is just one example, but this is a good, example of where a terrible company, no matter the insider sellings, no matter the logic or the valuation, when there's enough shorts and you trap them, it can create this massive powder keg.
Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.